GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Well, it was a wild start to the new week. That moves on top of a wild last week. So now, as of the new week, gold is over $2,000 per ounce. We're seeing the euro tumble lower, well under 110 now. And oil prices up above $120 per barrel. So some huge moves taking place in the markets. Currency is starting to trend as well. Interestingly, different opportunities there as well, with the euro trending lower, pound also trending lower, but also try to show you the Aussie dollar is actually trending higher alongside commodities. So lots of interesting stuff going on, and Bitcoin also tumbling overnight, well under 40,000 at this point. Anything else you'd like us to discuss, please drop a comment in the video as always, and if you're getting some benefit from this video, please just click that like button. We really appreciate that if you can. Alright, so let's start with the euro currency. This is our 4-hour time frame, and you can see these sharp moves lower. We're down just hovering around 108.50 at the time of recording. You can see that it's been a characteristic down move for a while. Since we tumbled under that 50 period moving average, the price hugged that 50 period moving average while holding on to support, and you can see that we were just hugging on to that 50 period moving average, and also the 50 line on the RSI. And then obviously as the trend has accelerated, we've just fallen away from that 50 line. So very much a downtrend in place. And again, characteristic of a downtrend is that we are taking out support levels, but we're holding resistance levels. So we put in the double top here, the resistance held at that point, then we gave way to support. That support then became resistance, which held. We were in this sideways range, the support gave way, the resistance held, and then the support held temporarily but gave way, resistance held, and we've tumbled lower. So very much a downtrend in place. Opportunities from here, well, obviously it's difficult to buy right at the bottom of an extreme move. Tends to be, if you do get a big move lower like that, like a big lower into oversold territory like we are now, then you actually tend to get bigger bounces. So we may be on the cusp of a bigger bounce from these oversold levels. And so the old low is back here above 110, but there is that big important 110 marker point. So it could be, I can't draw it perfectly, but pretty much there. A rebound up to 110, we may start get selling even before the 110 level, before we even get to that previous support. But there is scope for a bigger bounce because of the size of the sell-off and the fact that we've gone so oversold. So not to say that the trend is reversing necessarily, but a scope for a bigger bounce, but very much a seller's market at the moment in the euro. And that's in keeping with this big picture story that we've been looking at for a while. Well, in this weekly chart, we can see that we're making lower lows and lower highs. And the last time we tried to make a higher high after that bullish engulfing candle, we weren't able to. And then we were thinking maybe there'd be opportunities to buy, but when we got that sell off to the lows, we knew there probably wasn't going to be, and we've been showing weakness in the market ever since. Maybe there's scope for a reversal once we start testing these 2020 lows. But it does seem like a test of those lows is on the cards at this point. Very much a downtrend, no reason to predict the bottom really, before we at least get down and test these lows. Right, moving on to the British pound. As you might imagine, following the euro lower, obviously the euro and the pound, these are Europe, mainland Europe especially, but also the UK are, basically most susceptible to fallout from the war in Ukraine and the cut-off of ties with Russia. All these European and UK businesses no longer doing business in Russia. I mean, there's a lot of American companies too, but overall, the European economy more reliant on Russia than the US is, particularly for oil and gas, and so that's being priced into currencies at the moment with the euro and the pound falling. And here's the resistance again holding. and the support does hold for a while. You can see during this period of time, actually the 50 level is actually generally holding a support here, and you can see actually that generally we're kind of mostly above the moving averages at this point. But then the resistance holds, and then we start to see this. This support gets taken out, then this support gets taken out, and then we gap down to this support, and then obviously there's that dramatic move lower, and that's where we're very much in downtrend territory. Since then, these resistance levels have held. That firstly, this resistance held, right, tested the high, weren't able to get through it, and then this resistance made a lower high. All the while the support was holding while we're in that range, and now we've taken it out, and we're dropping back to lows around 132, which actually, if we scale out a little bit to the daily chart, you can see it's pretty much these lows from, was that at the start of the year? No, it was December. So it's a significant support level coming up. Maybe we get a bounce from there, but the trend very much lower at the moment. And also in keeping with a taking out of this low here, lower lows here, lower highs all along. And we did get one higher low, and we thought maybe there was scope for breaking above the downsloping trend line, but obviously not. You can see that gap lower on the weekly chart corresponds with the gap through. Maybe zoom in a little bit. Taking out this low obviously corresponds with that gap, if you see what I mean. Like these are the closing levels, and we pretty much just gapped through it, right, to take out this where the buyers were coming in last time. Well, gapped through it, no chance to buy this time. Now we're down at the lows, and it looks like we're heading lower. A bit like the euro, maybe a more clear-cut reason for a rebound off the lows. So we've just had quite a sharp sell-off. We're oversold. We're not dramatically oversold, not as oversold as we were down here, but still a chance for a rebound, perhaps just back to this support. If we get a rebound into there, you'd expect the support turned resistance to hold in a downtrend. And if that resistance doesn't hold, it means the downtrend's losing a bit of strength, and maybe we move up to test maybe the next level of support. Through these little lows here. Or back up to the top of the range again, but it's looking pretty soft. Dollar yen, less directional. We're still just in this kind of wide choppy range, just because the dollar and the yen are both a haven currency, and that's kind of what's driving everything at the moment. So you can see basically we're not quite getting to oversold levels. Equally, we're not quite getting to overbought. We're going back and forth above and below the 50 level, and if that's the case, we're actually approaching somewhere in this territory, or at least we're above it a bit now, but we're somewhere in the area where in the previous occasions it's been a buying opportunity to buy and sell at the top of the range. If you don't like trading in the ranges, then obviously we just need to wait for the breakout, and it's not so clear which way it'll go at the moment, but the overall trend is still more or less to the upside. You can see that support's holding, resistances most recently have held, but prior to that, resistance is getting broken. So was a bit of an uptrend, potentially it's reversing, but no support, no material support level getting taken out yet. So support holding, higher lows. We've just got these two matching highs to take out first. But for the moment, the trend does seem to be up with the dollar, and obviously that's in keeping with the pound and the euro falling. This is the big one. Gold we're off the highs a bit now at the time of recording, 1990, but we did strike that big 2000 level, and obviously bit of profit taking probably taking place at 2000. But you can see same general idea here with gold. We've been talking about this all along. It was not a good market to be able to read, but all we just noted was that these supports just seem to hold, even when there's a dramatic sell-off, a big rally up and then a big sell-off. Still, the support seemed to hold, and that was a sign of strength. And same thing, you know, the resistance. Let me use a shape instead to be a bit more consistent. Support's holding, but you know, even at this point, resistance is getting taken out, right? And then even then, this support extends through here. Resistance taken out, okay, it's a false breakout, but then support holds, and then eventually this same resistance taken out, okay, you know, proves to be a bit of a false breakout, but again, the support held. So every time there was trying to be a breakout, it was pounded back lower again, but the support held every time. Buyers came back in at the same level. Even after, you know, this big spike low was probably the start of it. You came back down to the before the spike, held, you know, held, and now we're really taking off into the trend after the buyers established that strength, took out this high, but there was no false breakout on this time. This was the real difference maker, and this was this previous high that we needed to take out. And you can see this is pristine technical analysis right now, right? So we took out that, unlike on this occasion where it got monkey hammered lower down to support, monkey hammered down to support. Here, tried to drop it, but no, hold on to the resistance from that previous peak, and then there was it. We got the rally up through the old resistance, came back, held, tried to monkey hammered again up from when we got that real big spike high. But the trend is very much established at this point, and we've now moved up above that spike high. So they keep trying to smash this market lower, and it does happen now and then, but actually every time it gets smashed, that turns out to be a buying opportunity at the support levels. So very much an uptrend in gold at the moment, and as I said, we're pretty much en route to test that record high that was in place. In place of the summer of 2020. You know, this was quite a significant resistance that we got smacked down from here. We got to about 1970, and it was like 1960, which was these areas of resistance here. We're now gapping above it. So on the weekly level, these are the last two fractals, right? So the next fractal is that record high. So we could get another false reversal here. It wouldn't be surprising, right? Because as I say, we keep getting those monkey hammered moves down from the highs. But if we do get it, based on previous experience, the support's going to hold, and it offers an opportunity to buy lower. Otherwise, it looks like we're getting the breakout. Okay, moving on to silver. Again, another nice trending market in place. Here is again a bit choppy, and you know, the same with gold, where here was the high, peaked above it, got smacked down, managed to get back it again, smacked back down to the underneath the support, but we held on to this, you know, that form of resistance held, but that's, you know, this level held, rallied up, got smashed down again, but held on to that previous support again. Made our way back up, tried to break out, fumbled around here, tried around here, and then got that big move up, and then smashed right back down, but held the support, right? Even when we got up here, because that was such a sharp move up, there was no real support level up here having been formed. These were just all single candles as part of the rally. Even when we moved up here, these were all just single candles as part of the rally, and then got smacked right down, but here's the support from the old resistance, and rallied back up again, back down to this high, consolidated for a while, and now we've broken out. And we're at, you know, we got above 26, and, you know, it looks like we're going to be heading higher based on this breakout. Here's our daily chart. Here's our weekly chart. You can see that we've been in this range for a while, right? And it looks like, you know, we tried to get sold off from the top of the range, right? So we got up there, up to these highs, smacked down, got up here, tried to be smacked down here, but now we've closed up above it, and it looks like we're breaking out of this range. And if so, you know, there's these highs are a bit spiky up here, but somewhere we're coming up to challenge these kind of highs up here. So 28 through 29 through 30 is the major highs of this long-term range that we've been in. Held the range, took up the medium-term high, like the mid of the range basically, 25.50-ish, and it looks like we're heading to the top of the range. So it looks like good stuff for silver. Maybe we get dropped down through the top of the range again, but you know, the breakout looks solid at this point. Moving on to the oil market, and yes, this is really impressive stuff. It's been going up for a long time already. Remember, it was actually WTI, which we're looking at now, was actually negative according to some contracts back in 2020, but now we're up and it's $123 per barrel. Brent is above 125. Another massive gap up at the start of the new week. And it's the same thing, you know, that moving averages have been in a bullish alignment for a while now. You know, the short-term 50 well above the 200. And we did get a brief period of selling here, but we held on to this support. Took out resistance, held it. Took out resistance, bit of chop there, but mostly held it. Support held here. Resistance got taken out. Tried to get smacked down from 100 and it caused that spike, but there was no follow through whatsoever. Just one little small candle following that test of 100, then gapped up through the resistance, and then big move up last week to 105, big move up to 110, pulled back a bit once we'd hit 115, but now moved back up again and gapped up higher, and now we're up over 120. So we're obviously heavily overbought, and now there is some temptation, I'm sure, to try and sell this market. But you know, this is this market's going parabolic, and it probably will tumble back lower at some point. But from my point of view, it's not my style of trading to try and sell such an obviously bullish market. I would look for some at least signs of divergence or something along those lines that give me some clue that weakness is coming into the market. You will probably get some sudden drops like this test of 100 and a spike lower, but they're going to be temporary, I think. And so it's going to be difficult to sell this market for a while, in my opinion. Even though obviously it's gone up a lot in a short period of time, it's very much an uptrend. So wait for the market to get monkey hammered lower temporarily. And those should be opportunities within the uptrend. All right, let's move on to stock indices. Slightly less clear picture here. Obviously, we're in that downtrending period where supports were getting taken out, resistance were held, support held out, resistance held, support taken out. Then the resistance didn't hold. We got above it, and we rallied up. And then since the resistance has been holding, but we didn't get above it. And we're below the 200 period moving average, and now here's the support, and actually at the start of the new week the support did get taken out. So this could be a false break lower, but it looks like the support's been taken. We have gone down just to kind of test this level, so we're getting a bit of a rebound here, but this could be a rebound into the support acting as now resistance now that we're lower. So we could be on the verge of another sell-off in the SP 500, and based on what's happening in other indices, that there's a good chance we are heading lower here. European indices did much worse last week, and Asian indices having a bit of a rough start to the new week. All right, and then heading to Bitcoin, you can see Bitcoin having a pretty rough start to the new week. No real obvious trend here with Bitcoin. You can see the moving average, the short-term moving average moving up and below the longer-term moving average. The longer-term moving average biased lower, but not drastically so. And you can see the resistance has held, and we did hold on to this big low from January. We did kind of drop through this intermediary support. So support's sort of getting taken out, but then resistance getting taken out here, support taken out. We weren't able to hold on to this level. So at the moment, you can see we kind of gapped underneath it. So at the moment, the bias is lower, but there might be some opportunities lower down. There's not really a clear trend. I don't particularly like Bitcoin at this point in terms of trading. It's not really clear what it's doing. Maybe if we get down to 35,000 again, there might be a kind of a setup to buy in oversold levels. That's kind of happened on, oversold once, oversold second time, buy, overbought second time, sell. So there's been a bit of that going on, overbought. So buying and selling overbought and oversold levels, possibly still the way to go until we get some big break below. 34k has been the what's this low down here? This is 34, but this is more like 33. So 33 to 34. If we take out those as support, then maybe it's becoming a more obvious downtrend, where you can actually start looking to sell old support levels and sell old resistance levels. But at the moment, it's kind of buying and selling overbought on the RSI. All right, I'll leave it there. Really interesting, volatile market with lots of trading opportunities. So good luck this week. And obviously, if you're enjoying these videos, make sure to subscribe to the channel so you see when this video comes out at the same time every week. Thank you very much, everyone. Good luck trading this week.